Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 291, and today we are going to have the Ask Weekend Investing round 29. So we do these Q&A sessions every now and then, especially towards the end of the week, several times in a quarter, and we try to answer any questions related to strategies, markets, small case operations, and so on and so forth. So far we have addressed upwards of 500 queries, unique queries, and these queries are available as a Q&A bank, and I'll show you where you can refer to these. All these are also YouTube videos with links to each question, so you can very quickly search for a particular query or a subject within the Weekend Investing Hub. But first, a look at the market. So markets opened lower on the back of an extremely weak session in the US markets, but came back very strongly after the open itself, and closed at 1.6% higher for the day, despite giving up some gains from the top. So it had almost reached 2% from previous closing. And of course, the leading sector today was banking. So PSU banks as well as private banks led the rally. Metals, commodities, energy stocks, and real estate also followed suit. IT, FMCG, and pharma were the least gainers, the defensive sectors, but it was very heartening to see that IT sector also rallied 0.6% despite a near 3% crack on the Nasdaq. So with that gain, IT and pharma actually have gained in the last 1 week. Of course, all other sectors are still in the red for the week, but nevertheless a good comeback. It could be a dead cat bounce. We don't know how the next week or the periods will go from here. But my sense is that maybe we may have a sideways or a challenging environment for October, and maybe after Diwali, Goddess Lakshmi will bless us all, and we will go up from there on. Nifty 50 up 1.6%, CNX 200 up 1.58%, CNX 500, small cap index, mid and small cap index all up about 1.5%, Nifty Next 50 up only about 1%. Within the weekend investing, small cases, MI20 up 2%, MI50 up 1.76%, MI25 1.7%. Fantastic performance from many of these. Only laggards today to some extent were MI80H, MI80H2, and India top 10 also to some extent. Other than that, all other strategies did well and in line with the underlying markets. Today's heat map was largely green, although there were pockets of red. So Coal India lost some ground, Britannia lost some ground, Asian Paints has been losing for the last couple of days, Shree Cement is down 1.1%. But the top gainers, HDFC Bank, Reliance, Bajaj Finance, Bajaj Finserv, ICICI Bank, Kotak Bank, IndusInd Bank, Titan, Maruti, Bharti Airtel large winner, JSW Steel, Tata Steel, Power Grid, all these were good winners of 2% plus, and there were several stocks from 0 to 2% as well. But FMCG, as I said, was a bit lackluster today. Top gainers, Adani Green Energy up 12.8% after Total Gas said that they may prune some stake. That caused some flutters yesterday in the afternoon and today morning, but this has come back very, very strongly to close near 2260. India Cements is selling some unit, and that is also up 9.5%. Strides Pharma, which was down yesterday, is up 7.7%. India Bulls Real Estate up 7.5%, and Mezagao Docks has been going up relentlessly, up 7%. In the top losers, IGL, Gujarat Pipavav, Mahanagar Gas, Sun Pharma Advanced Research, and Adani Transmissions were the ones losing between 3.5% to 5.5%. Some of these moves are also due to the reshuffling of the indices. I tweeted yesterday about the several stocks that are moving out of CNX 200 or moving out of the Nifty Next 50, and some of these are due to these moves of money coming in and money going out. So far in the weekend investing rounds, we have done 28 rounds. All the previous rounds are available in the description link below. You can go through each of these videos. 567 questions have been answered. Pretty much we've answered all kinds and probably all the queries that we have, but we still get some more queries. So we keep answering all the unique queries that we get. So we'll start with question 568 from Mr. Shravan Kumar. He says, previously, don't know till when, but the recommended size of ATH and all cap was 5 to 15 lakhs, but now I see all small cases are 5 lakhs to 30 lakhs. How 30 lakhs makes sense with respect to the market order driven small cases as opposed to the 15 lakh previously. So what we have done, we've increased the recommended size for most strategies. This has been done after careful studies of the slippage that we have seen and we have studied in the last many months, and we feel confident that larger capital can be accommodated within the same subscription costs, thus lowering the expense ratio for many of the users. So from that perspective, it should be a welcome step by most users who have been wanting to have more capital run these strategies. The next one is again from Mr. Shravan. Back in the past, you have once demoed that ATH and all cap are the best combination for romad. I would request people to please spell check when they send the questions. It becomes very difficult. Romad ratio and all, does venturing into MI top 10 make sense to someone who is having a... So I think we've done a romad ratio with MI top 10 against every strategy, but if we haven't covered this particular combination, please send us a mail and we will respond to you on that. Also, we will very soon release, I think within the next 15 days, a website where you will be able to do this automatically and see combined results. So I am very, very much looking forward to that very, very soon. The next question is question 570 from Repak Sarat Chandra. I hope I got your name right. I'm invested in NF10, but my investment is below the recommended capital. I would like to take evergreen as it covers top 200 stocks, which are already covered in NF10 and top 10. It will bring my expense ratio down. Can you please share thoughts on the same? So the dynamics of NF10 and top 10 are very different from evergreen. Evergreen is a very, I would say, conservative play versus NF10 and top 10. Yes, it will cover more stocks and it will probably bring your expense ratio down as well, but the dynamics of the returns is very different. So I would like you to go through the past results and then make that decision. There is nothing wrong in the current combination or the new one that you may have. I think a lot of people are putting too much emphasis on expense ratios, etc. You must see it in context of the returns that are expected. If you go to a strategy where the returns are lower, even with a lower expense ratio, your net outcome may still be lower. So have that in mind when you look at any alternate strategy with different expense ratios. Next one is from Vivek. How much time period should be enough for coming to a minimum amount required for specific strategies for keeping expense ratio to be minimum? If you are doing manual increments instead of SIP, example, all cap has 5 to 30 lakhs recommended amount, how many months per year? So I think I cannot prescribe any time period for coming up to the recommended strategy. If you like, I would like you to start at 30 lakhs from day one, but it all depends upon what is your capital flow available, and of course as a conservative strategy you should spread it out over 1 or 2 years. If you have, let's say, you won a lottery and you want to put in a lot of lump sum, I would still say bring it in over a period of time and not immediately. But again, as I said in the previous question, don't give too much importance to the expense ratio, especially for first year, because you are in for the long term, I hope, and not for 6 months or 12 months. I mean, if you're looking at 5 years, 10 years type of a runway, then 1 year of some additional expense ratio is not going to, kill the returns for you. So that's my sort of 2 cents on this. There's no real one, right or good answer for this. Next one is from Mr. Poonchand. When markets fall, value investing says buy the dip. Will it apply to momentum investing as well? So we don't really call, when you should add capital. That is your choice. But you should bring in regular capital is what I would prefer, in some SIP or invest more fashion. And even when markets fall, if you're adding to a momentum portfolio, it will allocate either to cash or to, the most defensive stocks. So there's nothing wrong in that. But this is definitely not value investing what we do. The next part of the question is doing SIP always in any market condition, but like to know what can we do in market falls in terms of momentum investing. So momentum investing, as I said, nothing specific needs to be done different from accumulating capital. The idea is that you keep doing SIPs in any type of market so that your money gets accumulated and you don't have to time the market when the market takes off, because it will do that without informing us, and only after the first leg of the large move has happened will we realize that we started in a bull market. Like for instance, today's move of 2%. I mean, we don't know whether this is a dead cat bounce or it's the start of something bigger, and nobody will know. So the whole idea of this 2-minute investing per week is to not focus too much on the market and allow the system to take care of it while we concentrate on our life outside the market. So that is the sort of underlying principle. Teja has the next one, very interesting question. Any update on loyalty discount program? So Teja, thank you for this question, because we have been relentlessly following this up with the Smallcase team, and they have been promising us that we will get this definitely this financial year, but I'm hoping before the calendar year. But it is somewhere in their roadmap of technical features to be added to the platform. So I remain hopeful. It is not something that will not be done. It will get done, but date is something that is not in my hand. Next question, 574 is from Arjun. Is market cap a momentum indicator? Yes, market cap is a momentum indicator since it is directly proportionate to the price, and a price move can give you a momentum indication. Can a portfolio be built using market cap only? I mean, invest in top 20 stocks of market cap regardless of performance and rotate monthly. What are your suggestions on this idea? Yes, it can be done. Please try it out and share your results with us. I mean, if they are very good, we will start a new product based on it. But I think this is very much what is our index formations also made of these. Even the Nifty will capture the top market caps and try to bring those into Nifty. So this is the basis of mostly how things work in the momentum world. Narendra has the next one. I am a subscriber of ATH and all cap. I am in a dilemma that whenever there will be a connection in the market like the present week, whether we buy the dip or we need to wait for the next week to buy, because I feel the next week there will be some change in stock or will raise the cash. So again, don't try to micro time the market or the strategy. If you are bringing in capital and if the strategy is in cash, I mean, you will hold cash for some time, and then whenever the strategy gets deployed, you will deploy the cash. Or like for instance, right now most strategies are fully in deployment. Then you bring in the cash, and if there is a dip, I mean, we lose some ground, but whenever it will rise. See, again, we are not trying to time the market, because nobody really can, unless you are a really smart cookie who can pick every bottom and top. We can't do that. So I mean, given that we have a runway of have had a runway of 6.5 years of real performance to show you. This has happened several times. Markets have fallen, markets have risen. COVID happened. All kinds of dips have happened since 2016 when we are running this in publicly. And the strategy do take care of it more or less. Sometimes, yeah, we may lag. Sometimes we may lead. I think the larger question is that if we are doing much better than inflation, if we are doing better than the benchmark, we should be happy without comparing it with anybody else. So that's my sort of 2 cents on this. Another question from Mr. Arjun. In India top 10, why only use Nifty 50 stocks? Why not use top market cap stocks? So the whole design of the India top 10 is to choose stocks from the Nifty. That's why we will choose stocks from the Nifty. If Nifty does not choose a high market cap stock for whatever reason, we will also not pick that. Next one is from Mr. Saikat Banerjee. Hope you are doing good. Thank you, sir. I would request, can you please do a daily bite on small case investment parameters, especially money put in, current investment value, and the divergence between them for better understanding of the same. So, no need really to do a daily bite. I'll point you to several presentations that we have made on these definitions and topics and examples of calculations. So please drop in a mail and we'll be happy to share those things with you. You can also go through the Weekend Investing Hub library and you'll get those details there. So yeah, we can do that anytime you like. This is the end of the Weekend Investing Ask Weekend Investing round. Thank you so much for sending in all your queries. I hope we are able to take most of the queries and satisfy the queries that have come in. In case not, please send us your queries by email. We are happy to take and address any query that you send. We don't want any of our users or any of our followers on Twitter to remain in ambiguity about any question that we can answer. So please do send us all your queries and do share these videos with your friends and family. And we will be taking a break on Daily Bytes for the next couple of weeks. So we will see you more towards mid of next month, and till then, goodbye and have a safe month ahead. Bye.